Good morning. Thank you for joining our special webinar today on Green Sukuk, the why, what, and how of financing renewable energy in the Islamic world. We have a really strong turnout today, so we really appreciate you attending, and we look forward to this webinar. This webinar is brought to you from the Green Sukuk Working Group, which is associated with the Gulf Bonds and Sukuk Council, the Climate Bonds Initiative, and the Clean Energy Business Council. The webinar today is hosted by the Sustainable Investment Professional Certification, the SIPC, which is run out of Concordia University in Montreal, and the Sustainable Financial Markets. The SIPC is an online program geared towards finance and corporate professionals to train them in the area of sustainable and impact investing. To learn more about this program, please visit us online. You can find information about registration questions that you may have, the calendar for the program, and any other questions that you may have. We'll be able to. You can find that on the website. So I'm now going to pass you on to Sean Kidney, who is the president of the Climate Bonds Initiative, who will introduce the panel today.
Thanks so much, and thanks everyone for joining us. I'm Sean Kidney, CEO of the Climate Bonds Initiative. We have with us today Mike Griffiths, who's the president of the Gulf Bond and Sukuk Association. We have Paul Geyer, who's the managing director of ICAP Germany, Interdealer Brokers. We also have Jeremy Crane, chief operating officer, and Karim Kuzbari, vice president business development of Edenium Energy Capital, who are representing the Clean Energy Business Council of the Middle East and North Africa. We're going to cover some brief outlines around the Green Sukuk idea that we've been working on, and we're going to end up with some questions. This is a 1-hour session. We hope to finish the slides in 3/4 of an hour and have questions at the end. The three organisations are described in the slide appearing on your screen now. There are a wide range of people working on this project, not all listed here. My last point is that we have a Twitter hashtag Green Sukuk, should you want to tweet any fabulous insights as we go through this presentation. I'm going to ask Mike Griffiths now to come online and give us a brief introduction about Sukuk. Mike, over to you.
Thank you very much, Sean. The Gulf Bond Sukuk Association is the trade association representing the fixed income market, conventional and Shariíah-compliant, in the Gulf region and in the Middle East. Sukuk are Shariíah-compliant securities akin to bonds, but distinct in some important respects. By Shariíah-compliant, to start, we mean that financing of certain purposes are, of course, not allowed, such as gambling, alcohol, pork, pornography. Holders do not receive interest as such, which is haram or forbidden, but can receive returns from the business or projects that are financed. Legally, Sukuk represent undivided shares in the ownership of tangible assets related to projects or investment activities. Sukuk holders maintain an undivided beneficial ownership in those assets. A key principle of Sukuk, and indeed of Islamic finance, is risk sharing. So while Sukuk may be structured and have cash flows like those of bonds, they also may have some equity-like characteristics. We won't go into the various types of Sukuk very deeply right now, except to say the most commonly used structure is called Ijara, where Sukuk relates to a partial ownership of an asset. Others relate to partial ownership in a debt, murabaha, or in a project, istishna, or in a business, musharaka. So we can just say that there are various structures can be selected to serve a particular set of issuer needs or investor preferences. Sukuk can be issued for general corporate purposes by a company or by a sovereign, for that matter, for budget purposes. But the greatest volume, particularly in the Middle East, has been issued by Islamic financial institutions to enable them to better match the duration of their assets and liabilities. Sukuk are particularly well suited for project finance, and this is where, and there have been some particularly notable successful issues in the region. We do expect to see more project bonds and project Sukuk over time as infrastructure spending increases and as both European and regional banks come upon constraints that will restrain their ability to fund infrastructure in the region.
Sorry, Michael, to interrupt. I just want to make sure you have access to change your slides as well. Are you able to do that?
Yeah. I have been trying to that. Would you actually just tick ahead to the next one now and just continue to do it? I'm not sure that facility is working.
Okay.
Okay, thank you. In any case, we do expect sponsors to look more and more often to the capital markets, and in this region, that's going to be more and more sukuk. The largest and most advanced single sukuk market is the Malaysian market, which enjoys strong official support. But demand for sukuk from the Middle East has grown within a now well-established bond market for Middle East sovereigns and sovereign-related entities, and an increasing number of corporates that have issued. Overall issuance from the region reached new records in 2012. For the first time that year, sukuk issuance exceeded conventional debt. Issuers have been attracted to the market by prevailing low rates, which in many cases are more aggressive than those on comparable conventional credits and for similar tenors. Sukuk does remain a small part of the global capital market, for sure, but all indications are that issuance will continue to grow as the Middle East capital markets mature and Islamic banking assets increase. The figures support that as demand for sukuk, new sukuk issues have steadily outpaced supply right into this week. Demand is underpinned by a steady increase in the liabilities or deposits in Islamic banks. Those banks are in need to park their excess liquidity, and there's a shortage of assets to do so. There's also widening investor demand that will be covered, I think, by Paul in a few minutes. That will include many conventional buyers as well. But as far as the Middle East goes, this is largely a U.S. dollar market that's euro clearable, much like general euro bonds. Issues are listed in London, Dublin, Luxembourg, and now more often on the NASDAQ Dubai more recently. Sukuk have the same ISIN numbers. They're rated according to the same scales, and they settle and trade and price in the same manner as bonds. The exception would be Saudi Arabia, which is a local currency and a little more difficult to access, but that may well change in the coming year. What is and why green sukuk? Green sukuk, or green bonds rather, have become a distinct established asset class pioneered by the World Bank and have enabled issuers to tap into large global pools of pension fund and sovereign wealth assets. So what is different about green sukuk? I think we should just for a moment consider that there's a Quranic underpinning to all this. If you consider the terms khalifa, which means stewardship, and amana, meaning trust, and whereby a man is held to hold a privileged position as Khalifa or vice regent with responsibility for earthly creation. Individuals are given this task and privilege in the form of God's trust. So sukuk by nature are by a form of ethical finance that lend themselves to renewable and clean energy projects. Green sukuk might be used to finance any number of environmental projects, including renewable energy, conservation, energy saving schemes, and so on. But I think we should be clear, though, that the Sharia compliance aspect is completely separate, a separate matter from green certification that may be granted according to this particular initiative. The Clean Bonds Initiative maintains a system. The Clean Bonds maintains a system for defining eligible purposes and assets for green certification, and I believe Sean will describe those in a few minutes. But first, let's let Paul from ICAP drill down a little bit into what we're hearing from actual sukuk investor base just now.
Good afternoon, everyone. Hi. Thanks, Mike, for that, and I think it's actually a good introduction into where the soundings came from, because Mike's already talked about some similarities between the sukuk market and the conventional bond market, and on our side of the pond, we've looked at the similarities between renewable energy bonds and conventional bonds, And it kind of draws me into where we are now and why we made these market soundings, because it strikes me as a tremendous amount of overlap between those seeking assets, whether they be ethical or Sharia, and those seeking good cash investments, and those with the cash, and those the projects to finance, of which there appear to be many across the GCC region, Europe, America, and Asia. I should first maybe qualify these market soundings, and yeah, it does flick forward. They're all taken pretty much from participants in the marketplace, whether they be in the Sukuk market or in the conventional market. The soundings, broadly speaking, what you see is what was said by a potpourri of Islamic investors, Islamic banks, non-Islamic banks with Islamic windows, GCC-based banks offering either Islamic or conventional or both services. There was some non-GCC input from all of these type of investors. So it's clear to me that the diverse interest in the renewable energy space and the bond space is large, diverse, and probably here to stay. So moving on through the slides, I think basically we've got a varying risk profiles. People, when they're looking to make their investments, have got varying risk profiles. They've got different balance sheet requirements, different credit policies, different motivations. And I think this, combining the renewable space and the Sharia-compliant space would be answering quite a lot of the motivational points that were identified. It's clear Sharia scholars will play a very large role in this, and whilst all the large banks, certainly in the GCC space that I spoke to, have their own Sharia scholarship and way of doing things, and their own people on board, there are some people who are looking to be investors and who will look to the outside scholars to ensure that there is a standardization. And I think that point will be covered later in the talk. I think regular Sukuk purchasers by themselves, they have their Sharia policies in place, but outside of the Sharia investors, there are also renewable investors, ethical investors, socially responsible investors, and it appears to me that the list is growing, collectively known as the alternative investment space, but frankly it's getting far more profile these days that I think is moving from alternative to acceptable. When we looked at what we thought the market for green bonds and Sukuk could be, well, frankly, we believe that the universe is rather large. On the one hand, there are already issues. I can only really speak with the experiences of what we've seen in the renewables, the green space in the conventional bond market. But already we're seeing project-specific issues have been done. To quote one example, Andromeda, a wind project in Italy, was financed over the last couple of years, and at the time it was a successful financing. And you've got the other issuers, which are the segregated issuers, those being people like EIB, IFC, who issue in their name, so it carries the AAA status of these institutions, but the funds are legally separated out and can only be used for renewable energy or climate change projects. It's clear that the lifeline or the maturity spectrum of all of these bonds would be well placed to address the problems that pension funds are having in seeking longer dated assets. And a lot of people that we spoke to, whilst the religious concept would be very high, and also the green concept very high, the real comparison is made in what can be earned and what risk do I take. As I've written here, if two profiles are presented, one brown, one green, and they've got the same risk-reward profile, then they would go for the green. And it's our belief that they would also go for the green Sukuk if presented with a regular Sukuk or a green-aligned Sukuk. People who are already investing in Sukuk would already be familiar with taking the risk of the assets, taking some ownership from the assets, and might refer to the various structures that would be put in place in order to address those points. The clear indication here, though, is that they are backed by assets. There are assets in play behind, and there is a cash flow spinning off of these assets. And so in investing in the risk and taking ownership of some of that risk is a clear desirable on the part of the Sukuk investor. The return on marketability storyline, I'm not clicking forward here for some reason. Can you click me forward? Ah, there we go. Nope. Ah, okay. Now it's clicking forward, lovely. Right, the consensus was that there would be a strong interest in this market. There is money chasing assets which are not available, and it would be desirable to make these assets available. And B, everyone, as we all know, is being crushed by the return on all bonds, be they Sukuk, be they conventional. And backing them with ethical and believable projects would be clearly desirable on the part of the investor. Liquidity will be an issue to start with. We're all aware of that. We see liquidity issues in the very new renewable energy space in conventional bonds. That's starting to be addressed. We're feeling that issuers are starting to combine the concept of benchmark sizing together with some secondary liquidity. There has been a few small secondary transactions. It's fair to say those secondary transactions took place not because of the green element, but because of the bonds being placed pari passu alongside conventional bonds. But I think as more issuers come to the market and as the overflow of demand is filled, we'll start seeing more of a secondary market come into play. The graph you see in front of you actually has been drawn, and it shows really where the Sukuk space has developed, and this goes back just over a year, and it doesn't go back to the poor times of when we had problems in the Sukuk market, but I think an overall long-term view of where Sukuks will be versus conventional. First of all, we know it to be a growing market. I think we will see a green element will improve the attractiveness of the product, and so I anticipate that we will continue to see relative outperformance in the green Sukuk space, notwithstanding any crises that we may see along the way. What's particularly important here, though, is that it really will depend on who is doing the issuing in the first instances. Later on down the curve, I think we can be a little bit more indiscriminate. I think the market will widen and open across various issuer classes. But right now we've seen in the renewable space, and what we would hope and expect to see in the Sukuk green space would be support from the large agencies, the EIBs, the IFCs of the world, the local Islamic agencies could play a role in this. But already, even in the green space, now that EIB, IFC, KEXIM have set some benchmarks, have set some standards, it's already opening the door to the corporate space. And one very interesting issue that actually has just happened this very week. I think most of the audience will by now be familiar with the name Tesla. Is it classified as a green bond? Well, it's not. It hasn't been, not deliberately, but I think it can definitely be classified as a potential green bond if you look at what the funds will be used for and the company that it's been issued by and what their modus operandi is. This graph, this grid here shows not all, but some of the more prominent issues that have come out over the last couple of years. The most recent ones really have been that have drawn the most attention is the IFC. We haven't got the KEXIM one up there, but that was also this year. The Topaz Solar and the Foresight deal that you can see under UK Solar refinancing. The Tesla one was a complete sellout. The IFCs were both complete sellouts, and we've seen some secondary activity in those. What we're hoping is that the enthusiasm we think that is in the renewable and conventional space will spill over into the renewable and Sukuk space, and so we hope that we'll see the same effect take place there. But of course, there's a lot of work yet to be done. There's still standardization, which Sean will talk on in the future. There's a lot of groundwork still needs laying and a lot of road showing still needing to be done. But I think a year, 2 years down from now, we're hopefully looking at a similar grid of perhaps similar issuers, maybe completely different issuers. But nonetheless, I expect all the deals to be reasonably well bought by the intended audience. Thank you.
Thanks very much, Paul. Sean Kidney again. The estimate we did last year of bonds that would be relevant to this market in the fixed income space was 174 billion. We will continue to review that figure as new bonds come out and put out information about it. It just gives you a sense of the scale of bonds that are relevant to the climate theme going forward and to protecting the environment. The Green Sukuk Working Group came together really to grow awareness about the opportunity to match the issue of protecting the environment, which is a concern in Quranic teachings, with the investment opportunities currently available. Of course, really Western finance has a lot to learn from the history of Islamic finance, and this has been one of our particular interests at the Climate Bonds Initiative, because at heart over the last few hundred years of Islamic finance has been the idea of a close relationship between ethics, between the social contribution, and between business and investments, a dynamic and a very intimate relationship where, let's call them ethicists, Islamic teachers have had a working relationship with business and finance about the nature of investments that are appropriate, that are to be pursued in the context of a broader understanding of the social contribution they can make to society. This is something that some people in society think we may have lost sight of in the Western capitals of finance. This is absolutely core to the idea of mobilizing capital in all its forms to address the incredible challenge of climate change and protecting the environment over the coming 20 and 30, 40 years. The International Energy Agency, just to give you an idea of what overall capital needs are required, estimates some $36 to $40 trillion of investments, that is capital going into investments that will achieve a return, are required between now and 2050 above business as usual to achieve a sustainable environment for the planet. That's a fairly large slice, and it's important that we look at all areas of both activity and of capital markets to be able to mobilize that capital. One of the issues, one of the key issues that is important to investors who aren't particularly aware of the space but have an ethical interest in addressing the issue is, of course, what should and shouldn't be included. At the Climate Bonds Initiative, we've developed a certification scheme and a definition scheme drawing on climate science around the world to define. Now, some of that's fairly straightforward, and in the green sukuk space, what we're proposing initially is a focus on some of the big opportunities for investments coming through, especially in the Gulf and the North African area, which is around renewable energy. But that particular approach also includes investments that are required in areas like urban energy efficiency, in mass transit, with its ability to reduce the impact of fossil fuel, the need for fossil fuels, even in sustainable agriculture. These are all part of going forward. The Climate Bonds Initiative certification scheme is made up of a coalition of investors. That investors group has a board. The board is made up of $10 trillion worth of investors. The Investor Network of Climate Risk in the US, the Investor Group on Climate Change in Australia, CalSTRS, the California Teachers Retirement System, the State Treasurer of California is part of that, and Nature Resources Defense Council in the US and Carbon Disclosure Project. That board draws on advice from people familiar with climate science to determine what should and shouldn't be certified within the scheme as it's currently constructed. There's also a broader group, quite a large group. This is just some of the organisations represented, who are involved in devising the nature of the formulation of eligibility criteria, the kinds of assets that could be included, and so on. The International Energy Agency in particular has been active in a couple of our recent working groups around energy efficiency and around solar, giving their views amongst a large group of others. The US Green Building Council, Bloomberg New Energy Finance has recently joined. Behind this is a group of climate scientists on a climate science committee who are providing, going forward, macro advice about inclusions. That ends up with a published standard on a website about the nature of environmentally relevant assets to be included with this broad theme. It includes solar parks, obviously, but also biogas plants, other forms of renewable energy. It definitely includes energy efficiency, and it's fantastic to see in some of the Gulf states the work that's been done with LEED buildings in Doha, for example, in this particular area. Those kinds of assets are really important going forward to have a reasonably sustainable economy. The question now is how we actually green our energy grids in all these places. It also includes electric vehicles, for example, in a future where our fossil fuel supplies are constrained and need to be constrained for carbon emissions. Vehicles in cities need to be electric, operating off a green grid, for example, mass transit. A green sukuk, in theory, could be a programmatic kind of investment in protecting the environment, such as a government investment program or subsidies like a feed-in tariff for renewable energies and so on. So bonds raised to finance those kinds of activities could possibly be structured in such a fashion to be relevant as well. These are options going forward. So the Climate Bonds Initiative is looking at this issue on behalf of our partners, but it's very important to note that this is a fairly open and inclusive process. The kinds of eligibility criteria that we proposed will go to open consultation. We will be seeking input and feedback from people in the Green Sukuk Working Group, which is a large coalition, as well as around the world working in this particular space. And that's a very important part of coming up with robust criteria for what should be included. That's where we are at the moment. Lastly, I just want to point out some of the immediate opportunities available, and this is where we're going to bring in Jeremy into the discussion as well. In Abu Dhabi, for example, we have a smart grid infrastructure with up to 1.2 million smart meters project underway. Now that's a sort of project that could be relevant for a green sukuk certification. The renewable energy investments that are being planned at the moment in Saudi Arabia, in Kuwait, in Qatar, in Tunisia, or in Morocco. I've had some discussions recently with parliamentarians in Morocco about just how ambitious their plans are beyond the existing schemes that are in place. And of course in Dubai itself, where there's a 1 gigawatt solar plan. So these are all things that could be relevant to going forward. I'm going to bring in now Jeremy and Karim to talk a bit further about the detail of Green Sukuk.
Thanks, Sean. Jeremy here at Adenium Energy Capital. Based in Dubai, Adenium's really in the heart of the region that's I think can benefit most from the Green Sukuks, and Adenium as a developer and financer of projects sees this as a huge potential. So I'm going to talk a little bit about the applications that we see and how this could take place in the near future. If we can go ahead a slide. First off, looking at what is required to set up a sukuk. We heard a little bit about this earlier, but basically the way that we see this as being possible, or a green sukuk as being applicable, is sort of through a three-way test. Basically, a sukuk must receive certification, also known as Fatwa, and as was mentioned, this is approved either by a board internal to an investment group or by a separate appropriate mufti or jurist. for the investment to be considered acceptable. A fatwa must not break new ground, i.e., it's critical that the fatwa is compatible with what fatwa are already out there and in use. And then there's generally three tests that the Mufti will use to say whether it's Green Sukuk will be viable. Primary one being, does it perform a public good? So things like infrastructure, energy are seen as public goods for sure. The second one would be that it doesn't bear interest or other items that are counter to other fatwa, and then and fatwa in general that it's compatible with. Slide. So basically the three steps then that one would follow to set up a sukuk would be to identify an asset, identify that it meets the criteria that's been laid out. It's green of nature, as Sean has just gone through a list of. Generally, government-backed is extremely positive. We're looking for opportunities that are stable and bankable, Fatwa compliant, and perform in public goods. Step two is to create a capital structure that does not conflict with anything else in the market or any other fatwas. So that, again, this is the interest, or it has any usury or seen as being usury to the investors or the project owner. And once that's set up, then it's necessary to have the sukuk certified by a multi. And as it's been mentioned, this is large institutions that we're dealing with will often have an internal Islamic compliance committee, and but smaller institutions will rely on external multis for this process. So, as an example of a green sukuk, there's a project underway in Jordan at the moment, a 30-megawatt green power plant. So it meets the step one we just discussed. Geographic location in Jordan is positive. It's predominantly Muslim country in the Middle East, so investors in the neighboring countries are comfortable with investments there. As we know, the return profile of solar is a steady return, which makes it easy to create the scheduled payments that a sukuk that creates a strong sukuk. And finally, it's a sale of power that is guaranteed by the government, so you are not at risk of defaulting or missing payments. So criteria test, public good, yes. Interest, it's a non-interest. We set up as non-interest bearing, and Fatwa compliant, yes. It's currently under consultation, but we're expecting that that's not going to be an issue. So, what are the advantages of this of the application of a green sukuk? Obviously, there's a large, rapid growth in many Islamic countries at the moment, creating a demand for infrastructure. There's a significant pool of capital available in these same countries with a tag for sukuk style of investment. These combined with the requirement for public projects and that are often funded through PPP type structures creates they create there's a high compatibility here, and finally, we see often that there's a lower cost of capital for Sukuk investment and green investments versus traditional sources. Obviously, there are some concerns with the Sukuk structure as they are right now. Primarily, number one is that many investors in Sukuks are looking for shorter tenures, generally 5 years up to about 7 years, whereas power purchase agreements or other types of agreements for investments are structured over a much longer time period. So the mismatch of those two causes issues. The second concern is over timing. Do you bring a Sukuk investment in during the construction? Do you bring it in post-construction as a refinancing option? That's something that's still being explored. Thirdly, as we mentioned, a government guarantee is very critical, and some investments do not have those, or the government simply may not be a strong guarantor. Performance guarantees are also often required. So we have a strong off-taker of the power, but are we confident in our day-to-day, month-to-month, year-to-year production? And so how do those get structured with perhaps the construction company or another third-party insurance group? Compatibility, depending on the source of the capital, there may be some Sukuk issues. Certainly, you can't, a fund that's invested, for instance, in gambling would not be able to be a co-investor in a project with a Sukuk investor. And then finally is the uniformity and what Sean was just been talking about. That there is a significant variance in fatwas from region to region, depending on the religious sect of the region, and so creating consistent products across areas is certainly a concern. So with that, I guess I'll pass it on to Mike.
Okay, yeah, thank you. Yeah, I think if we can kind of, if we will advance the slide, please. And I think we can kind of sum up in a sense, where we are. That clearly Sukuk is the time is ripe for Sukuk. It's proven financing vehicle now with proven investor base. Advantageous pricing and a compatibility with projects that of the type that we would like to see financed. I think it's a matter now of identifying the particular projects of quality and size, and they do exist. But I think we also have to demonstrate to the organizers of those projects and the sponsors that this is a proper alternative, and the capital markets are advantageous for them as opposed to other forms of finance. The government, we need to continue to reach out to government entities and make the case, and that will include international institutions, financial institutions, who I think we can hope and expect will be supportive. And as well, I think where important will be the continuing evolution of the Sukuk market generally, and the adoption of standards and so on across regions, which is a work in progress, frankly, but it is showing a lot more promise. That is, I think, where we some of the elements of the way forward. If you could advance the slide, please. I think that a first issuance to identify will be an important one. Not only for an issue itself, but as a demonstration effect, as has been, as a sort of a proven methodology from the that we can take from the conventional side, and some of the international financial institutions would be appropriate to kickstart that, perhaps, and we know that they are certainly very actively looking at how to support the transition countries outside of the Gulf, in the Middle East, those that are experiencing change, and so this may be a proper way to support the employment and restarting growth in those markets, including through projects. Sukuk is a preoccupation in each of those countries, whether it's Morocco straight through to Egypt. It is something that is getting a lot of attention, and legislation is being adopted. But I think again that supranational bank or institution would be able to create a size and achieve a rating that would eventually create a benchmark issuance that would be visible, very visible, and hopefully treatable in the secondary market as well. I think then I would just pass it to Andrew and to Sean, please.
Thanks a lot. Thank you very much for wrapping us up there, Mike. Look, we're turning over to questions now. On the next slide is your reminder of a Twitter hashtag and an email address should people want to do ask follow-up questions, and Bridget Boole and the Climate Bonds will field all those. But now, Andrew, do we have any questions coming through that we can respond to and get a conversation going? While we're waiting for those to come through, I'm just going to say that at the end of the day, this is not about designing a clever financial instrument. This is about sorting out the due diligence for investors who are interested in an environmental theme and making it easy for them to find products, to find investments, to access sukuk that will meet their needs. We do have demand for sukuk, and we know we've got an issue, an interest in environmental aspects of investments. Bringing those two together would seem to be an enormously important task going forward in the Middle East, in North Africa, and also in developing Muslim countries like Bangladesh and Indonesia, where there are an enormous array of investments that need to be financed in the years going forward. So that's the impetus behind us, and we of course always welcome other people to join this discussion and join the group, which is why the email is provided.
So Sean, we have a couple of questions that come in. I'm going to read one for you now. Is there a preferred underlying Sharia structure for a green sukuk, i.e. Lajara? I'm not sure if I'm saying that right, but if you're able to answer that, that'd be great.
Jeremy and Mike, would you like to just have a go at those to get us going?
Yeah, or perhaps perhaps Paul might as well. I think the question did mention Ijara, and we did hear that in the market soundings as an identifiable and perhaps the most appropriate structure.
Yeah, I think most likely the start-off process will be what people have become familiar with, and Ijara is certainly a model that sukuk investors are comfortable with. It addresses most of the, if not all of the ownership and risk criteria that they prefer to participate in. It also crucially covers the longer dated aspects of the market as opposed to the shorter dated aspects of the market, and where I think most of these projects are going to be required to be financing long dated projects, and the investors are looking.
Thank you very much.
Okay. So to answer in a nutshell, I think Ijara probably would be the modus operandi of choice to start with, but I think as the market was to develop, we should and could see different structures.
Thank you. Sorry, Jeremy, do you want to make a comment, or should we go to the next question?
I'm not sure if you guys can hear me. I don't seem to be showing up on the screen.
Yeah, we can hear you beautifully, Jeremy. We can hear you beautifully.
Oh, perfect. I think as far as this underlying structure, at this point, don't think we are on a deal-by-deal scenario. I think through this process, we hope that the structure will become clearer. As I mentioned, I think there's going to be a difference. It's going to need to be different depending on each region because of the different fatwas, different views of what people are comfortable with to classify as a Sukuk compliant investment.
Okay, thank you. Andrew, David, any more questions?
There's nothing yet. I just want to reiterate, if you do want to ask a question, you just type your question in the control panel. You'll see a question box on your screen. And you can also actually hit the hand icon. That will allow you to ask a question out loud. So I just encourage you to type your questions or ask a question out loud. We just had one that came in. With cost of funding being currently low, for example in the U.S., and quality issuers are flocking to these bond markets, isn't that a detriment to the development of the Green Sukuk market, given we need quality issuers in the first place?
Paul, do you want to have a go at that?
Yeah, I only got half the question, to be honest with you. Could I get it again, sorry?
Sure. It's a question from Yanis.
I've just got the last bit around quality issues.
Okay, so I'm going to repeat it. With cost of funding being currently low, for example in the U.S., and quality issuers are flocking to these bond markets, isn't that a detriment to the development of the Green Sukuk market, given we need quality issuers in the first place?
Well, I think we need quality issuers, and it's fair to say that the issuers are flocking to the U.S. market for the low cost of funding, not only through the nominal U.S. interest rates, but also through the FX of their mother country. But that's probably a temporary measure. Tomorrow might be euro, the next day yen, and the next day Swiss. In the end, this market will start off with whatever issues come to the market, and to use the examples of what we've seen recently, we've seen quality issuers like IFC issue and be very successful. Why were they successful? They pitched in at the same level as their regular bonds in a part of the market or a sector of the maturity sector segment where demand was at its highest, so naturally they would be very successful. And then if you look at just this week's example of Tesla, I mean, Tesla is not a quality, you might not say Tesla is not what one would argue is a quality name. Well, it's certainly a quality electrical vehicle maker, and I think it's sold at a rate which is comparable with other quality vehicle makers. And I don't know what the distribution was like, but I think a good amount of that distribution would have ended up in North American socially responsible funds. So I think we will continue to see low interest rates, and that will not deter quality issuers backing green projects and bringing arguably the best level of finance into projects. If anything, it would enhance it should enhance the number of projects that can actually get done. One big theme driving the renewable energy market across Europe is that governments, as we all know, are relatively strapped for cash, and it's only really going to come from the capital markets. And to come from the capital markets, you only have to incentivize or appeal to the investors. I hope that answers the question.
Yeah, I'm going to chime in and say, just add to that, that active bond markets and at the moment, or strong demand in one area, doesn't obviate the idea that there's a class of investors who are particularly interested in investments using a certain instrument, that is a sukuk, and that particular class of investors does seem to have a dearth of available investments, and particularly ones that meet these kinds of ethical criteria that we're discussing or including in the environmental theme today. So from the point of view of an issuer or originator or someone who's running a project, this is a way of tapping a different, broader, and probably in many ways more patient group of investors that diversifies your funding sources. And that's a very important thing for anyone in this space for the long term. That's the thing I would add to that.
I think also an interesting dynamic in the conventional sukuk market is that issuances that have been reasonably generous to the relative conventional curve, and so they've by definition made themselves attractive to non-Sukuk investors as well. And we've seen exactly the same dynamic in the renewable energy space. And in fact, if anything, we've now seen a narrowing of the gap between a deemed to be green bond and a conventional bond of roughly the same maturity. The only differentiating factor currently is the level of liquidity in a very, very nascent secondary market.
If I could just add one thought here, as from the perspective, if you were a system owner, perhaps a wind solar plant owner, and looking for a funding source, and you're comparing, very inexpensive issuing of bonds in the U.S., as was pointed out, versus a Sukuk issuing, a Green Sukuk issuing, I think you could make an argument for potentially getting a lower cost of funding from a Green Sukuk, especially in a country where you don't have a high credit rating, where it's not a AA rated off-taker. I think you could probably see a lower risk premium put on a country, and especially a Muslim country somewhere in the Middle East or that region by a Sukuk, with a Sukuk instrument than you would with a conventional U.S. or European issuing.
I hope there amongst the audience there are quality project owners prepared to try that modus operandi.
Good point. And of course, if you've got a comment to make, not just a question, please speak up. Andrew, do we have anything else at this stage?
We just have a question about the presentation itself, about the availability of slides. The presentation will be posted on the SIPC website. It takes about a week, so if you do want to review and see this presentation again or send it to someone else, we'll have it up on our website in about a week.
And if you want to subscribe to the Climate Bonds email list, we will be sending out emails as these things become available, just to remind you.
And we have one more question. We probably have time for one or two more. I'll read the one that just came in. From the panel experience, how receptive is a government regarding providing a guarantee to enhance the quality of a Sukuk offer? From our experience in Australia, there's a reticence at state and federal levels to carry guarantee on their balance sheet to protect their rating. Hope that's clear. Are you guys able to answer that?
Yes. Go ahead.
I can try to address that. We've been dealing with several governments on this issue, and I think what it comes down to is whether the government feels its government's generally role, depending on your political views, are to provide support for infrastructure development. And in a country such as Australia, where you've got a relatively stable economy, I can see them being resident to provide those guarantees where everything's functioning well. In an area where, in a country where there's less stability, for a variety of reasons, we often see governments as being much more likely to step in. They understand that that's a required part of the to attract investors, to attract FDI. They need to provide those guarantees, and so that's something that we actually see as very common. Now, the question is, the second part to that question that would be natural is to say, well, how strong is that government guarantee? And that's where you can get into issues and where specialized assurance products can be your friend to assure against political risk and other elements.
I think the position was hiring 2 people.
I think that's the secret there, the specialised products. In emerging markets, there's scope to get guarantees, as Jeremy says. In places like Australia, really there's a lot to be learned from the US model, which and Australia hasn't actually used this model adequately yet, in my view, which is to set up various kinds of guarantee pools, which are effectively selling an insurance policy of some sort. So there is a charge, a modest charge, because we're talking about state-backed funds, rather than commercial funds, so in areas not competing with the commercial insurers, and the specific area is policy risk insurance, which is very difficult to get a commercial insurer to address. Those kinds of pools, which is simply another way of government saying, trust us, it's not a problem, guys, don't worry about it, can be quite successful in making the difference to the viability of an investment. So there's a need to look at other markets where these kinds of solutions have been tried, and I'll recommend my Australian colleagues have a close look at the state bond market and the muni bond market in the US. New York in particular is doing some very interesting work at the moment in this area.
Yeah, it's very interesting, Sean. Actually, I too many years ago to think about worked in the U.S. municipal market, and of course that was at a time when we had the monoline insurers who were guaranteeing in a very, very conventional basis, very common way, a lot of infrastructure. It was a very efficient manner and of financing and achieving a AAA for good projects. Unfortunately, that business has, for reasons not related to that, we lost the monolines by and large as insurers, both in the municipal market and more widely internationally. There are some other prospects, particularly coming out of the Islamic Development Bank, that are being talked about for novel modes of guarantee for Sukuk, which are beginning to see light and are looking for pilot transaction. Concerning guarantees, also, I would just say, in the Gulf itself, the government role has always been very key to getting access to capital markets for their projects. That has in fact been the model. And as much as we would like to see the governments themselves issuing directly to establish domestic yield curves and so on, they have often chosen to, in effect, guarantee implicitly or better explicitly issuances. That's certainly the strategy of Saudi Arabia at this point, which has drawn down its direct sovereign debt program to almost nothing, while at the same time have shown a willingness to guarantee very substantial issues, for example, for civil aviation. And this is the way that they support infrastructure development and access to markets for critical infrastructure projects. And so I think that there is a positive side to this and very good prospects for applying it to Green Sukuk.
Okay. We need to wrap up now. David, any final comments for us, or can we just have a closing remark, a quick closing remark?
Quick closing remark. I just want to thank everyone for joining today. We had a huge turnout, a lot of good discussions, some great questions. So thanks to all our presenters and to all the attendees.
Thank you, everyone, and thank you for Concordia for supporting this event. And remember to Twitter hashtag Green Sukuk and join our coalition if you're interested.
Thank you.